a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The S&P hits a record for the first time since June 2nd on US-Iran deal hopes and AI bets. That optimism tempered this morning as Houthi militants issue a fresh threat against Middle East shipping. And sky-high AI spending plans pressure SpaceX shares after its debut earnings report. Optimism and outperformance across Asia. Let's get the latest from Alice French in Tokyo. Alice.
Good morning. Yes, definitely a revival in risk appetite today here in Asia, particularly in the AI space, partly driven, as you say, by hopes that Trump may be nearing a deal for the Strait of Hormuz. In the AI space as well, we've had some strong earnings in Japan. Chip package substrate maker Ibiden having its biggest gain since 1990 after some very strong earnings and an upgrade from Morgan Stanley, the best performer on the MXAP there. Of course, still a lot of focus on the yen. Now, even after some more supportive comments from Besant overnight, we can see the rally is somewhat stalling after that intervention that we saw last week, creeping back towards the 158 level. There is some speculation on the ground here that authorities may come back in and intervene to try and push it up to that key 155 level. So still some uncertainty there.
Alice, thank you so much. That's Alice French in Tokyo. Now let's get to London for a look at Europe. Here's Justina Lee. Justina.
Good morning, Bonnie. Now, it was a slightly better day earlier, but we're seeing here that actually the Stocks Europe 600 is rapidly pairing some of those gains with kind of oil backup after the militant group Houthi issued their warning. But still kind of doing solidly today are a lot of those miners, with Glencore reporting a surge in profits. A lot of the metals they trade, such as copper, have had a stellar quarter. And now also still reflecting maybe that decline in oil is kind of long and bond yields all across Europe. The German 30-year yield down 2 basis points. Now, we flipped the board here. We've been talking a lot about how, even European stocks have hit a record. Earnings have been doing well. And here we're seeing, an index of data surprises out of the Eurozone. And you can see it's also back up kind of around the highest since before this conflict began.
Justina, thank you so much. That's Justina Lee in London. Here in the US, optimism in these markets still, with the exception potentially for the Nasdaq 100 to drop today. This after AMD disappointed, even though earnings beat. It disappointed, and that's causing shares of Dell and other chip makers, Intel and so on, to be lower pre-market. That said, there's still hopes for a deal this afternoon. But just in the last few minutes, Iranian state TV came out and said that any reopening of the Strait of Hormuz in the immediate term would require a change in US behavior. So let's just temper those hopes ever so slightly. Looking at yields, we are seeing a massive drop in the last 24 hours. The 10-year yield back down to 461. The 30-year yield still at 516, remains above 5%. And the 2-year yield at 420. Now, this is partially because of oil. Let's take a look at where oil is. It had been lower this morning, but Brent is firmly back above $80 a barrel after the Houthis issued that warning, and also on these Iranian state TV comments. That's your macro picture. Let's get across now to Chloe Melee for some pre-market movers.
Good morning, Bonnie. We are seeing SpaceX shares tumbling this morning after it reported this much higher than expected spending on AI, which overshadowed what was otherwise a pretty strong and pretty solid set of results in this debut earnings. So we're down more than 10% on the back of this morning. Moving on to another tech company that is in the red today, that is AMD, which has reported an outlook that was seen as quite disappointing. And so this is a sign that the company needs to show some more rapid growth to justify the very lofty valuation. And finally, one last mover that's also in the red, that is Pinterest, and has reported also quite disappointing numbers, and is down about 8% this morning because of this disappointing outlook, even though analysts have said that the AI-driven improvements were quite positive, but this was overshadowed by this underwhelming guidance.
All right, a lot of stocks lower today. Chloe, thank you so much. Chloe Melee will be back later in the hour. And also coming up this hour, we're going to catch up with Matt McLennan of First Eagle Investments. And we'll look at SpaceX earnings with Tasha Keeney of ARK Invest. SpaceX reporting second quarter revenue that handily beat estimates, but higher than expected AI spending plans causing the stock to plunge. Total capex spending jumping to about $18.4 billion, almost $16 billion of that spent on AI. Bloomberg's Lean Al-Rashdan joins us now. Lean, why is this much spending a problem to the market if Elon Musk can continue to raise it?
Hi, Vani. Well, this was a big concern for investors, just how much the AI segment of the company is spending. So when the capex came in a few billion higher than what analysts expected, it came in double what it was in the first quarter. It just showed how much the company will be spending on AI, with kind of a bit of uncertainty on how much it can yield. And they said also that this will be the same spending will happen in the third and fourth quarter. So that kind of overshadowed what were otherwise really good results.
What about its plans to take on Verizon, T-Mobile and AT&T in the United States, sending those stocks lower, certainly?
Yeah, investors were excited about it. We'd been waiting for more information about how Starlink, SpaceX want to take on that market. So we had the CEO and president talk about what their plans are going to be. They fleshed out more of like this strategy on how they want to take on Verizon, T-Mobile, and these companies in the U.S. which break in hundreds of billions in revenue every year. Now, the tone was optimistic, but we have to remember that every time, starting this kind of project takes a lot of money and it takes a lot of time. You have to build land-based infrastructure. You have to send more satellites into space. It's a different business model, and it needs more governmental approvals. So it's not an easy thing to start, and it will take years for them to be able to start, and then years more for them to take on these legacy providers.
Interestingly, I thought Musk said he's looking at starting these orbital data centers and starting that build out as soon as next year, Aline. Is that doable?
Well, he made a lot of ambitious claims kind of about annual rate revenue and about revenue in general, how much they can achieve within the next few years. It went way beyond what estimates analysts gave us before. So their ambitious plans, Musk has always had ambitious plans like this. Not all of them have panned out. We know Starship, kind of the main project for SpaceX for several years, and their venture into space kind of meet a lot of hurdles, some explosive issues. So Musk can make these claims, but we're kind of unsure on how quickly he can get into space with Starship and how much more he can do in space. There are so many issues to still tackle.
Lean, thank you so much for joining this morning. That is Bloomberg's Lean Al-Rashdan. More earnings out from Infineon and AMD, both stocks under pressure this morning amid growing investor concern around AI and valuation. Bloomberg's Neil Campling is with us now for more. What happened, Neil? I thought we were done with this narrative, and yet AMD plummeted even though results were really just fine.
Yeah, morning, Bonnie. I think part of this is a situation of the classic travel and arrive for the stock price. AMD is the sixth biggest contributor to the S&P 500 returns so far this year. So the stock had performed particularly well. And really it's a reset in terms of expectations for some investors. And the guidance is solid. The revenues in the quarter reported was up 50% year on year. But it's just that some estimates were above where they are guiding to. So it's a reset. But in terms of growth and in terms of the underlying demand for the GPUs, CPUs, they're still intact.
Now, the Infineon results were maybe just a little bit less, optimistic. Is there anything in there that we should keep an eye on in terms of the AI build-out?
Sure. So they're obviously more geared into kind of the industrial build out. So not as directly involved in AI, although they have some exposure, and it perhaps is reflected in their KPI being the segment margins, which is only guided to in line with where the Strait's already at. So there is, I think, there's more puts and takes with regards to Infineon's outlook and report, but really investors were hoping for more. Given, again, it had been a solid outperformer relative to the market in Europe and relative to the perceived AI winners index in Europe.
Neil, let me ask you about developments out of China. So proposing a ban on optical parts, it's probably going to hurt hyperscalers. Explain to us how and whether we really should be worried about this.
Yeah, so the potential restrictions are basically the optical components show up in the kind of these GPU clusters in the AI data centers and on the back end to allow for connectivity and the fast connections. So they won't be ripping out the existing ones, but it's talking about really the future new products could be banned. Now, We have US companies that provide these optical solutions, but it takes time to build enough to replace those. So it's a concern, given the high growth that we're seeing in the data center build out, about just how disruption could come through, which we've seen historically in the past with other Chinese components on other parts of the chain in terms of Huawei and ZTE kind of technology. So it's definitely a space to watch out for going forward.
Yeah, it could be more bottlenecks for the hyperscalers. Now, in terms of the AI companies, so OpenAI and Anthropic, they're revealing now more unsanctioned actions by their models. We're getting this on the daily now, Neil, and it's almost like these companies are, you know, in some ways boasting that their models are doing this. What should we be thinking when we hear about all of these unsanctioned actions?
Yeah, so you have these are, you know, the OpenAI and the Anthropic models are proprietary rather than the open systems, but they are so powerful, but they're also sharing as much information as they possibly can with the regulators to ensure compliance with rules. But clearly, in terms of the testing, as we often get in these new technologies, we are showing where there are some vulnerabilities in the systems, but it's also partly about making sure that they are future-proofed as they roll out and scale to general usage.
All right, Neil, thank you so much. Across all the topics for us, as usual, Neil Campling in London. Turning to Iran, President Trump remains optimistic for a deal.
I think it'd be very smart to make a deal. We'll see what happens. They had a very good day. The negotiations were good. We're moving along very nicely. We'll find out. We'll know in 48 hours.
Joining us now from Dubai is Bloomberg's Abir Abu Omar. So Axios reporting we should have a deal this afternoon. Scott Besson telling the same to CNBC. And yet, Abir, Iranian state TV just came out and said there's going to be no immediate reopening of the Strait unless the US changes its behavior. What are both sides saying?
It's a good question, Vonnie. I mean, we were walking into the early hours of the morning with President Trump saying that a deal is imminent. We will see over the next 48 hours or so. And then we also reported about those negotiations that are taking place between Iran and Oman about a mechanism of some sorts to open up the Strait of Hormuz. But you just alluded to what I was taking a look at before the show about 20 minutes or so ago. Iranian state media coming out and saying, citing a source familiar with the matter, that Iran is essentially saying that the negotiations that are taking place are not between Iran and the United States. They are between Iran and Oman solely, and they're not about the reopening of the Strait of Hormuz permanently, but rather it's a mechanism of some sorts with Oman to get a trickle of movement through the Strait of Hormuz. So adding a little bit more to the confusion that we've been witnessing since the start of the week, really. This whole thing started with President Trump threatening the biggest attack since World War II, and then going back and saying negotiations are set to commence or recommence, and then a couple of days of confusion, and then today, 48 hours, that comment that you were just hearing from President Trump on the tarmac in LA in the early hours of our morning, and now these comments from Iran or from Iranian state media. Our own reporting, Vonnie, suggests that there have been talks between Iran and Oman about opening up a trickle of movement, and the mechanism really is about opening up a middle passageway. And then you rightly referred to the Axios reporting from our morning hours as well, suggesting that they're both talking about a mechanism to open up the pathway over the next 60 days where no tolls or fees would be implemented, and that the announcement of that could be as soon as today. We understand as well, Bloomberg understands from our own sources, that Qatar is mediating between the two warring parties, and that Qatar has come up with a language in a draft that is pending the signing of both Iran and the United States, or the approval of the two warring parties. Nothing is finalized there, so we await and see. And then you're obviously seeing Brent crude prices reverse the losses that we saw earlier. They were dipping below $80 on the barrel, but the market now reacting to this news, and also reacting to news from, again, earlier in the day, about an hour and a half ago, about the Houthis in Yemen threatening movement in the Red Sea yet again, saying that ships flagged to Saudi Arabia that are moving in the northern part of the Red Sea are prone to getting attacked. And so you're seeing Brent crude on the screen there reversing earlier losses and now gaining above $80 on the barrel.
All right, Abir, we will continue to monitor. Abir Abu Omar in Dubai. Thank you. Now to other top stories trending on the terminal this morning. The UK is in its longest jobs slump since the global financial crisis. S&P PMI data show employers cut headcount for a 22nd straight month in July. Firms cited cost cuts, while some said AI investments reduced the need for workers. An out-of-control abandoned SpaceX rocket has collided with the moon. That's according to a report from The Independent. The 4,000-kilogram spacecraft hit the moon with the power of 3 tons of TNT. Left behind a new crater on the moon's surface. Another hedge fund is seeing huge losses from last month's AI sell-off. Whale Rock's flagship hedge fund dropped 21.7%, erasing about half its gains for the year. The fund, which manages about $19 billion, is known for making concentrated technology investments. Coming up, a razor-thin race in Michigan. The latest from state primary elections next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. In Michigan, Democratic Senate primary race turned into a much closer one than expected. NBC now projecting Abdul El-Sayed as the winner over Representative Haley Stevens by a slim margin. Joining us now from Washington is Kate Ackley of Bloomberg Government. Kate, there's a message here obviously for Republicans, but not even for Republicans. What is the message for the Democratic Party?
This is one of many races where, the progressive wing of the Democratic Party has really surged. Now, you mentioned this was a close race. Haley Stevens, who's a Democratic Congresswoman from Michigan, who was looking really down in the polls. It's a much tighter race than was previously expected. NBC News has projected that El-Sayed will be the winner. But again, much closer than some of the initial polling. This was one of those races where outside money was pouring in. The American Israel Public Affairs Committee, a super PAC connected with AIPAC, spent over $30 million to boost Haley Stevens. So we just saw a ton of outside money pouring in. And that was actually part of the messaging. El-Sayed said he didn't take corporate PAC donations, and he criticized Stevens for her acceptance of that type of money. And so you saw political money not only be a factor in helping the candidates out or hurting the candidates, but actually being part of the messaging of the candidates themselves.
Is the Democratic establishment taking notice? I mean, this is another candidate from the left flank of the party that has won, and in a Rust Belt state as well. Will it change how the Democratic Party approaches the midterms?
Well, this will certainly be a test. I mean, if this looks like that in the general election contest, you'll have a much more progressive candidate, Abdul El-Sayed, against Mike Rogers, the Republican. So this will not be one of those situations where you have a deep, deep blue seat where you know that whoever wins the Democratic primary will almost be a complete shoo-in for the general election. That's what we saw in Colorado in the House race where sort of the insurgent left toppled a sitting Congresswoman, and then also, of course, in New York City, those districts there. This will be a test for progressives in a battleground state. Can they win in the general election? And that's going to be a storyline that I think people are writing over the next 3 months, and that the Democrats will be assessing, what is the strength of the progressive wing of their party in a battleground state.
All right, Kate, thank you so much. We have to leave it there, but that's Kate Ackley of Bloomberg Government. Coming up, a look at what else is making headlines in your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the BBC, one of the deadliest strikes on Kyiv this year. A Russian attack on Ukraine using ballistic missiles and drones, killing at least 17 people. President Zelensky says interceptors could have saved lives. Next up, the Wall Street Journal is reporting Defense Secretary Pete Hegseth's pick for Army Chief of Staff, General Christopher Lennev, is in jeopardy due to objections from some Republican senators. Lennev has been a four-star general for just 6 months. Most chiefs serve at least 18 months before assuming the top position. And finally, the Financial Times reporting banks are planning to offload $15 billion of debt tied to a Google-backed data center in Texas leased to Anthropic. Wall Street lenders are growing wary of holding AI infrastructure debt on their balance sheets. The Journal says a consortium of banks led by Morgan Stanley planning to tap the bond market to refinance the debt. Let's take a look at your macro picture today. A little confusing perhaps in the oil market. We were lower earlier. Brent was firmly off its highs thanks to the president basically saying that we'll have an answer on Iran within 48 hours. An Axios report saying we could get a deal this afternoon. And Scott Besson comments to that effect as well. We're back above 80 now after the Houthis reaffirmed their threat against Saudi shipping in the Red Sea, and also after Iranian state TV said the US has to change its behavior before the Strait opens. That said, yields had come back down on oil, dropping. 461 is where we're at on the 10-year yield. Don't forget we get the quarterly refunding statement at about 8:30 Eastern. S&P futures pointed higher. We hit a record yesterday. We haven't done that in 2 months, so it was time. Nasdaq futures, though, are pointed lower after AMD results, casting a little bit of a pall on what had been a fantastic earnings season up to then. Coming up, we're going to speak with Matt McLennan of First Eagle. He's seeing an unusually favourable backdrop for corporate profits. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The S&P hits a record for the first time since June 2nd on US-Iran deal hopes, also AI bets. That optimism tempered a little this morning, though, as Houthi militants issue a fresh threat against Middle East shipping. And sky-high AI spending plans pressure SpaceX shares after its debut earnings report. So let's take a look at futures. We had that record from the S&P yesterday and 4 days of gains for the chip makers. It looks like the S&P is going to continue on its run today. Perhaps it's questionable whether the Nasdaq will. AMD did cast a little bit of a pall over this market this morning. Plenty of stocks with a halo effect, Intel lower, Dell lower, and so on after AMD shares dropped. The earnings report was fine, but it didn't blow away estimates. Russell 2000 futures higher as well. In terms of yields, they came down quite rapidly when oil moved lower, but oil is starting to creep higher, so we'll see if this holds. But for now, the 10-year yield is at 461.07, a bid into the 30-year yield as well, 516.17. Still, though, this is its longest run above 5% in quite some time. And then taking a look at oil, we're back above 80 on Brent after the Houthis issued their warning, and Iranian state TV said, hang on a second, the Strait isn't going to reopen immediately. The US needs to change its behavior. But we're still expecting, according to President Trump, some kind of answer, at least, in the next several hours. Let's get to some individual pre-market movers now with Chloe Melee in London.
Good morning, Bonnie. SpaceX is planning to spend a lot on AI, and that is getting investors quite worried. And we've seen those higher than expected capital spending plans overshadow what was otherwise a pretty good set of results. And so we're down more than 10% in pre-market trading this morning for SpaceX. Moving on to AMD, which is another tech company in the red this morning. It issued quite disappointing guidance. And so it seems that this was really not enough to sustain the really impressive rally that we've seen in those AMD shares since the beginning of the year. So we're down about 9% there. And finally, let's end on a positive mover. We've got Arista Networks, the cloud networking company, really jumping this morning. We're up more than 14% in pre-market trading after giving quite an upbeat revenue forecast. It seems that demand is very strong, very solid for that company, and we are seeing that reflected in those shares.
All right, Chloe Melee in London there. Thank you so much. Global stocks notching another record after some choppy months. Matt McLennan of First Eagle writing, quote, as we move toward 2027, investors may want to temper expectations. Markets have already repriced higher and profit growth is unlikely to remain at today's exceptional pace. I'm pleased to say Matt joins us now. He's head of the global value team at First Eagle Investments. Matt, first I have to ask you a broad question about these markets. I mean, you go in every day and you watch all of these narratives unfold. I mean, SpaceX yesterday, you're a value investor. What's going through your mind all day?
Well, I think even as a value investor, you have to take a close look at where value creation is happening in markets and what the narrative is that's driving markets. And I think this is one of those moments where the narrative behind markets is unusually concentrated. Everyone's talking about AI. It's affecting chip stocks, the cloud compute companies, and all of the companies that markets expect will be disrupted. But when you stand back from the moment and just look at the pricing overall, I think it's fair to say that this degree of focus on AI has led markets to a place that's arguably a little complacent. We have credit spreads that are very low relative to history. Earnings multiples are very high relative to history. If you just look at how households have their money invested, they have more in equities now than real estate. That's highly unusual since World War II. And the big companies in the S&P 500 are now net issuers of stock. They're not repurchasing stock. So we have a number of signs that would suggest that markets are fully rich in this environment of AI narrative.
Yeah, you say it is not necessarily the time to become bearish, but it is a time to become broader.
Yes.
Do you, though, find any value anywhere in the AI sphere? I mean, you must have been tempted to look, and there are patches. I mean, before a year ago, some of the chip stocks were, we're up 200% since then. You would have had to say back then, although it might have been obvious at the time, that there was value there.
That's correct. In fact, if you looked at our portfolio 18 months ago, one of the biggest capital deployments we made at the time was into Samsung. And that's an investment that has performed soundly for us since that period of time.
Understatement, yeah.
But today, you have to look more broadly. I think you can find value if you're looking in the AI space. Sometimes the value might be in companies that are perceived to be subject to disruption risk. And so one of our larger investments is actually in the software space, which is where everyone's concerned that software is going to get disintermediated by AI. And so we have an investment, for example, in Workday, which is essentially a system of record for HR, payroll, business processes. And I think the thing that's interesting when you have companies that are systems of record is that they own proprietary data. Now, an LLM is going to scrape what's publicly available to figure out a narrative for you to read, but they can't scrape private data unless it's done by the company that has that private data. And so I think for a company like Workday, AI will provide incremental business opportunities, but it's priced for disruption.
Yeah, down 23% year over year. The software space, though, has been coming back ever so slightly. I mean, we saw, Microsoft and some of these other companies really just go gangbusters over the last few sessions. Is it a general idea that software will come back, or is it very specific software companies?
I think it's very specific to companies that really control a system of record, whether you own the sort of Salesforce database or whether you own something like the payroll and employment database. System of record software is important. CAD/CAM, companies like Dassault Systems, for example, very hard to replicate those businesses. But if it's just a plain vanilla company that has an app that applies to publicly available data, that could be at risk of being disintermediated. So I think you have to be selective within software. I think the other reason that you've seen these companies come back a little bit is that the CapEx story that's fueled the semiconductors, because let's not forget the CapEx of the hyperscalers is the profits of the semiconductor companies. That's reaching natural limits at this point in time because they went from spending a fraction of their cash flow on CapEx for data centers to spending all of their cash flow for CapEx on data centers. And so that CapEx can only grow so quickly going forward. And you're already seeing them having to tap debt markets to grow. And we see copper prices going up, DRAM prices going up. In the media, you see Kathy Hochul, you see the Texas governor talking about slowing entitlements for data centers. So we're at a window where the pace of this AI investment may be naturally moderating.
How do you think about changes at the Fed and how that's going to impact the market and your investments going forward? I mean, we have obviously a new Fed chair. We have perhaps a lot less transparency on how the individual members are thinking.
So initially when Kevin Warsh came into the market narrative and at his confirmation, I think the initial market response was a credibility trade. Perhaps his early comments were a little more hawkish than the market expected, and we saw that the dollar went up, gold went down, and two-year bond yields went up. And so the markets in the early part of Kevin Warsh assuming the role were surprised by what they perceived to be his hawkish tone. So there was a kind of credibility trade there. I think after the last release, that came into question a little bit. Some of those things reversed because there wasn't a rate hike and there wasn't a lot of guidance on what to expect going forward. And I think what market participants may be missing here is that the Fed has less degrees of freedom than usual right now because of the fiscal situation in the United States. If you're running 6% deficits at a time of full employment, it's very hard to raise rates because then the government has to roll its debt to those higher rates, and it produces a faster growth in the level of government debt outstanding.
Do you think that's actually causing them to pause, even though inflation continues to run hot?
I don't think they would say it for obvious reasons, but I think it is a gating constraint. You can't run substantial primary deficits, that is the budget deficit before interest expense, and then just keep raising interest rates. It brings forward the prospect of a fiscal crisis. And so it is a constraining factor on the Fed. And I think to have a truly independent Fed, you need a fiscal situation that's balanced.
One quick final question, Matt. International markets, how will the situation in Iran affect their valuations? I mean, we've seen some huge run-ups and some huge sell-offs thanks to the Iran war. Might it change how you invest internationally?
So we're talking before about the fact that at a time of market concentration, it makes sense to broaden your horizons. And we talked about different sectors in the United States, but that same statement can be made about international markets. By and large, if you look at the valuation of international markets, they're more modest than US valuations. And there are many incredible companies internationally that trade at reasonable multiples. International markets, in many cases, have been more adversely impacted by high energy prices. So if we get a resolution of the situation in Iran, I think international markets could be more positively elastic to that resolution. And if we get this continued pattern of to and fro, they're already discounting a worse outcome than the US markets, which are at record highs.
All right, Matt, it's all upwards from here, it seems. Matt, thank you so much for coming in this morning. That is Matt McLennan of First Eagle Investments. Now to others, top stories trending on the terminal this morning. Iranian state TV is reporting the potential agreement between Iran and Oman on the passage of vessels through the Strait of Hormuz is unrelated to the reopening of the Strait. In the Red Sea, meanwhile, Yemen's Houthi militant group says it will attack Saudi tankers in the Bab el-Mandeb waterway. A spokesperson for the group said the move is a result of Saudi Arabia diverting ships from the choke point. China is tightening export controls on drones to the US, expanding its response to Washington's tech restrictions. The Commerce Ministry says drone exports, key components and related technologies will now face strict case-by-case review. Shein is said to be preparing to gauge investor demand for its Hong Kong IPO as soon as this week. The retailer could seek to raise between $2 and $3 billion in a listing that could happen this month. Its IPO efforts have been delayed for years, and its valuation has declined. This is Bloomberg. Taking a look at more earnings results now. Paramount Skydance profits surged in the last quarter as merger costs cuts paid off. Joining us now is Geeta Ranganathan of Bloomberg Intelligence. So Geeta, more cost savings, but this has to be the last quarter that this is possible for Paramount, right?
Yeah, so really, I mean, with Paramount, we're seeing some really good momentum when it comes to those synergies, as you just pointed out. This is from the Skydance integration. But obviously, the big question, the elephant in the room, is what happens with the Warner Brothers Discovery transaction. And as we know, the judge has now set a trial date that goes into March. So we do have a lot of uncertainty here from a legal perspective, and then you have those ticking fees, which could go up to as much as about $1.5 billion. Paramount, of course, obviously wants to close this transaction because otherwise they have to pay this massive $7 billion termination fee.
Now, in the quarter that was, streaming revenues were up 33%. That was a pretty phenomenal performance. Can that continue?
It definitely can, but at the end of the day, I mean, so one of the reasons for the streaming performance that we saw was because of the World Cup, and Paramount Plus was able to acquire a lot of subscribers internationally. So that obviously helped them. So there was good subscriber growth. But again, Vonnie, if you look at this in the context of the broader streaming landscape, the broader media ecosystem, Paramount Plus needs scale. They have about 80 million subscribers, but then you're going up against, giants like like Netflix, which has 325 million, Amazon Prime, which has close to about 250 million. So in this business, scale matters for operating leverage, and this is why the Warner Brothers transaction and procuring that Max platform is a do or die situation for Paramount Skydance.
Disney reporting later as well. Talk to us about what we should expect and whether Disney might actually consider selling part of its A&E Global Media, as Rich Greenfield has been saying.
Yeah, so actually they did a report yesterday that they sold their 50% stake in A&E Media back to Hearst. That was for about $1.2 billion. And really what this helps them to do is kind of streamline their operations. I mean, the one thing that every media company really wants to do is reduce their exposure to the traditional TV ecosystem. And that's exactly what they're doing here. But I mean, broader picture, Vonnie, if you just kind of zoom out here, this is still principally a parks business. And I think that is what investors are going to be really looking for. 60% of their profits is generated by the parks. There has been some commentary earlier, just a few weeks ago from Comcast, which kind of suggested that there might be some weakness, some macroeconomic weakness in their Orlando park. So it's going to be interesting to see whether, Disney confirms the same or whether it was just Comcast and the Universal Parks giving up share to Disney. So that's obviously one of the things that everybody's going to be watching for. And then the second big piece of the equation for Disney is its streaming business. So we know that they've really made some fantastic progress when it comes to streaming profitability. This is a key metric on which they're going to be judged going forward. And it's going to be interesting to see whether they kind of raise their guidance targets for over 10% margin this year, or, it's just kind of steady as she goes.
Yeah, I mean, it's another test for Josh D'Amaro, right? I mean, he's been there a couple of quarters now. How is the market judging him? How are investors, reacting to his performance so far, Geeta?
Yeah, unfortunately, Vonnie, there hasn't been really any huge catalyst. I mean, we've seen a lot of different reports. Obviously, the sale of A&E Networks shows us that he's very focused on kind of streamlining the business, getting everything in order. We've heard some reports about him wanting to kind of completely revamp the Disney Plus app, kind of make it this central hub, if you will. And there are a lot of different moving parts here. So we know that there is this Hulu integration, which is kind of happening as we speak. But, can Disney Plus kind of become the broader hub for all things Disney? Can you be getting your park tickets there? Can you be buying movie tickets there? So that is a question that still remains to be seen. But so far, this is a second quarter as CEO. I think he's done a pretty good job in kind of communicating, the different operating, financial, and, the strategic targets for the company.
Yeah, as you say, it hasn't been in the job that long. Shares down almost 14% year to date. Geeta Ranganathan of Bloomberg Intelligence, thank you so much. Coming up, another big batch of earnings will get you set up for your trading day next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. SpaceX reporting second quarter revenue that handily beat estimates, but higher than expected AI spending plans caused the stock to plunge after hours. Bloomberg's Lean Al-Rashdan joins us now. Lean, AI revenue tripled. It's more than $2.5 billion now, but it spent $16 billion on AI. So how does SpaceX expect to continue to keep this up?
Well, they're expecting the same expenses for the next 2 quarters, and analysts are feeling a bit hesitant about that. That's why we saw the stock fall about 11% post-market trading. They've said that that they have plans for how they're going to cut down on the spending in next year, but for now, analysts are really hesitant about the amount of capital that's being spent on the AI business, which was already a concern for them going into the earnings, and there was a lot of pressure on the stock. So that explains kind of the move in the market.
Yeah, cloud services, according to Musk, will account for the bulk of the revenue by the end of the year, as much as $10 billion. So that was something positive. And also the beats were positive, but investors aren't really looking at the metrics on a quarterly basis for SpaceX, are they?
No, I think, there were a lot of hesitations going into the earnings. This is their first ever. And while some of the numbers were positive, the revenue beat estimates. You have the loss per share was much lower than what analysts expected. But then a lot of the problems around the amount of spending that the company's doing and kind of uncertainty on where you're going to get those yields, even if they tout these ambitious plans around Starship and around the telecoms segment that they want to go into, it's still kind of uncertain how much yield those projects will have.
Yeah, I mean, it's interesting. SpaceX plans to take on AT&T, Verizon and T-Mobile in the wireless space, and those stocks are much lower in the pre-market this morning because of that. What kind of time frame did we hear?
Yeah, and I mean, what explains kind of the move in those companies is Starlink has been really good at taking over in their segment of the business, and they've had more satellites than any other a provider. But now that they want to go into the telecom segment in the US, they have to build so much land infrastructure. They have to get more governmental approvals. They have to have satellites. They have to take on these legacy providers. So that's going to take at least a few years to be able to build the structures, and at least a few more years to be able to kind of convince customers to transition into Starlink. But the president of the company seems very optimistic that they could rake in hundreds of billions in revenue every year from this segment.
And it would be recurring revenue. I have to ask you, beyond earnings, the staggered lockup release begins tomorrow, obviously, and it's 20% of the total shares that are going to be released over the next 6 months will be released on Thursday. Lean, will the market digest those shares?
That really is kind of uncertain. So that is what's causing also additional pressure on the stock. The shares fell below their IPO price, and whenever that happens within the first few weeks or months of a listing, it kind of bursts this narrative that the company and the banks had been pushing since the IPO. So that's also going to add pressure. The expenditure around AI and these kind of ambitious plans that don't really have structures. The companies tie up with Tesla, how much they're sharing information-wise, and the companies that they have joint ventures in. That's all putting pressure on the stock. The 100 billion of shares dropping is only going to add uncertainty and additional pressure. So some analysts are expecting that shares are going to go down.
All right, Lean, thank you so much. That is Lean Al-Rashdan for us. Thank you. Now, a look at what's ahead today. First up, data. ADP employment data at 8:15 Eastern. That's followed by PMIs at 9:45 and 10 a.m. Eastern. Then Fed Governor Lisa Cook will be speaking at 4 p.m. And of course, we're still mid-earnings, so a host of earnings from Disney, Uber, Eli Lilly, they're all before the bell. SanDisk, eBay, Expedia among companies reporting after the close. In terms of your pre-market movers, AMD extending its decline now, down almost 9% after its AI growth outlook underwhelmed investors, though the rest of the earnings report was pretty good. Arista Networks, though, up almost 15%, an upbeat revenue forecast there for the networking equipment maker. And Booking Holdings is up almost 6.5% now, rising on strong travel demand. Don't miss our interview with the CEO of Booking Holdings on open interest. That's Glenn Fogel at 9:30 a.m. New York time. Let's take a look at your macro picture as we head into the Wednesday trade. Brent crude well back above $80 a barrel on this fresh threat from the Houthis, and also Iranian state TV tempering hopes for some kind of a deal to be announced this afternoon. The 10-year yield unchanged. There had been a bid into treasuries as oil dropped. S&P futures pointing to gains after we hit that record yesterday. That's it for Bloomberg Brief. Surveillance is next. This is Bloomberg.